I've been seeing a lot of articles lately comparing Nvidia to Cisco in the dot-com bubble and comparing the whole S&P 500 rally or the Nasdaq rally to the dot-com bubble, claiming that we will have a stock market crash very, very soon. And in this video, I'm going to tell you why I've been bullish on the S&P in 2024, why I continue to be bullish on the S&P and even Nvidia and Nasdaq stocks in 2024. Now, I do believe some kind of a bubble is forming, and I think a market crash is imminent, but I don't believe the best thing to do is to be 100% cash or to try to buy puts on the S&P 500. I think there's a much better way to protect yourself, or maybe to short against the S&P 500 without actually shorting it. It's something that will likely go up whenever the S&P or the Magnificent Seven come down, and they will pay you a 5 or 6% dividend while you wait. I'm going to share all of it here in the video. But this is the first article comparing Nvidia to the Cisco rally in the dot-com bubble, which is really, really bad, or comparing the Nasdaq 100, went up 3% for the first time since the dot-com bubble era, why it brings up old memories of scary period. Now, this is a lot of drama, and I just don't see it. I don't see that Nvidia and Nasdaq are now doing whatever they did in the dot-com bubble. Now, if you look at Nvidia, yes, it's up a lot, over 1,950% over the last 5 years, and over 63% year-to-date alone. But if you look at the fundamentals of Nvidia, you look at the blue line, which is the chart of the price, and the white line, this is EPS per share. And if you look at it, as Nvidia was going up, EPS per share has continued to go up, and it's now over 25 for 2024, and the stock is around $780, $760. So the rally in Nvidia is not all 100% of a multiple expansion. It's also a massive expansion in earning. Now, I personally see some kind of a dot-com bubble style of a market crash forming, but I think we're very far away from this phase. Now, if you look at the S&P, it's a little bit expensive. If you look at the forward PE ratio, it's only 20. Now, 20, yes, is a little bit high, but we also have record high profit margins, almost pretty close to record high, way higher than we had in 2008, way higher than we had in 99. Yet if we look at what we had in 99, we had a forward PE ratio pretty close to 26. And now the PE ratio is around 20.3. And it's not even back to where we were in 2021, even though in 2021 we had 0% interest rate. So we should have a higher multiple, but the market could get irrational. So what I'm seeing here in this chart is that yes, the multiple is expanded, but we could go much higher on the multiple before we go lower. And this is nowhere close to a historical frenzy peak or a dot-com bubble peak when we were trading 25, 26 with much lower profit margins and much worse fundamentals than we have right now. So this is the first reason. Now, something else that could be true or could be not true, and it's something pretty funny. It might seem silly, but this is someone that they posted something on Twitter, and this is pretty much his brother, which never talks about stocks. He messaged him saying, "Are you bullish on Nvidia?" Now, it might seem like, oh, this is nothing. It could be fake, but if this is true, this is a pretty amazing indicator, and this is what we had in 2021. And whenever you have retail, whenever you have the masses, people that never talked about stocks, never talked about crypto, joining in the market, this is when we have a pretty decent historical top. This is what happened in 2021. People were looking for the next Tesla. They were looking for the next Bitcoin. That's why they invested in Solana and all these altcoins and all these kind of things. And then we had the massive bubble. And once everyone went in, this is when we started going down, and we crashed in 2022, and people vowed to never touch stocks again. And once this happened, we bottomed. And here we have the rally in 2023 and 2024. And eventually the same thing is going to happen again. And once we see more and more people that have nothing to do with stocks, nothing to do with crypto, they're starting to join in. We have more and more people seeing Nvidia and wanting to play or find the next Nvidia. This is when we could have a massive, massive top in the S&P 500. And I think we're somewhat far from this phase, even though we seem very, very high. But my theory is, and this is something I predict pretty much, and I think it will happen, is that people will get bored from Nvidia. Now you may say, what do you mean? Nvidia is the hottest stock in the market. Now it's the hottest stock in the market. But if we really want to have some kind of a massive top, a massive frenzy kind of top, Nvidia will become the boring stock of the AI. And you're going to have new stocks that are going to start to take over. You're going to have SPACs and special purpose acquisition companies. You're going to have IPOs around AI, and these IPOs or SPACs, they're going to be up 50 and 100%. And you're going to have massive, massive rallies in many different AI stocks from people trying to find the next NVIDIA. This is the whole trick of what happened in 2021. We had Tesla, where Tesla had good fundamentals, they were a little bit overextended, and they saw how Tesla rallied. And Tesla was the one that caught the attention of the public, of most people that have nothing to do with stocks. So they wanted to find the next Tesla. They joined Robinhood, they signed up for Webull, Robinhood, these kind of places, and they started looking for the next Tesla. And this is why we had every single SPAC, every single IPO around EVs or anything around clean energy. They would go up 50, 100, 200, 300% within a few days. And the same thing happened with Bitcoin. Bitcoin was the best crypto, and then people got bored. They were calling Bitcoin the boomer coin, if you remember, in 2021, because they're trying to find the next Bitcoins. They invest in Solana and all these projects. Some of them were scams, some of them were good projects, but then people got attracted to Bitcoin, so they say, oh, I want to find the next Bitcoin. And once you start seeing these things, this is when we tend to have a massive, massive top in the S&P 500 or in the AI rally. And now we have NVIDIA. NVIDIA is the king of AI, but it's not going to be the king of AI for too long. And once we start seeing people trying to enter the market, say, oh, I'm entering to find the next NVIDIA, to find the next AI stocks, this would be pretty much, in my opinion, a massive, a pretty good indicator of some kind of a massive top in the S&P 500. Now, a pretty good indicator of retail investors joining is the monthly active users on Robinhood. If you saw the monthly active users in Q4 of 2020, they were around 11.7 million. They rose to 21.3 million. And this is when we pretty much topped in the S&P 500. I think it was, we topped in February or March of 2021. And a quarter after that, after the top, we started going down. People were buying the dip, thinking it would go higher. And this is when we topped users in Robinhood. By Q4 of 2021, they were 17.3 million. And now the monthly active users are 10.9 million, much lower than 23 million. And they might be starting to rise again. Now, there's many different brokerages, so this is not the only indicator I would look for. But this is a pretty good one to look at Robinhood, because the UI is very easy for most people. A lot of newer investors, if they're trying to find the next NVIDIA, they will most likely sign up for Robinhood, not for Fidelity or Interactive Brokers, to try to find the next NVIDIA. And this is what I'm pretty much watching for and waiting for to confirm some kind of a historical top in the S&P 500. And something I would like to remind a lot of people is that the S&P 500 doesn't have to always go up. We had many different periods over the last 100 years of 0% returns. Like from 1905, I think, to 1953, 1954, we had 52 years of 0% return, real return, meaning adjusted for inflation. Then we had another 26 years of 0% return. Then from the 2000s to 2013, we had 13 years of 0% real return in the S&P 500, and we had Microsoft stock flat for 16 years. Now, after 2008, as you know, a lot of things changed. The government is printing more money than ever, quantitative easing and all these kind of things. So the dollar is going to lose more and more value. And by means, the S&P 500 is most likely going to rally over the long term. So I'm not sure if these 0% returns are going to happen. Maybe real returns, we could have some kind of period of 0%. But again, earnings are still growing very, very rapidly. The S&P 500 is still somewhat reasonably valued on a forward PE ratio. If you look at forward PE, it's more reasonably valued than most people believe. You have a lot of investors that are trying to find some kind of opportunity, some kind of stocks that haven't gone up yet. And this is why my portfolio has finally started to perform. I share some of these stocks on YouTube. The first one is Decisive Dividend. This is just a micro cap in Canada. But this is what I said, that I will be coming for these caps. And this stock is up 40% year to date. I mean, crazy. Another stock, which I can't talk about, it's a little bit too small for YouTube, but it's called Atlas Engineered Product. This one is up 30% year to date. And I have another one that's up like 57%, as much as NVIDIA. And people had never heard of them. And I'm seeing a lot of inflows, 100,000 shares at a time, 300,000 shares at a time, because investors are trying to play the rally. So they are looking for many different stocks that haven't gone up yet. Now, for me personally, I would not be shorting the S&P 500 right now. If we will have a market crash, I personally believe it will likely be in 2025 for two main reasons. The first one is, if you see over here, every time we have a negative year, we tend to have 2 or 3 years of or more of a positive year. We rarely have a negative year than a positive year than a negative year. It hasn't really happened very often. Even here, we had a negative year in 2018, 3 years of positive returns. We had a negative year in 2008. We had like, I don't know, 7 or 8 years of positive returns. So we rarely have a negative year than a positive year and a negative year. It pretty much never happened because you have the optimism and momentum pushing everything up. So we had a negative year in 2022. 2023 has been positive. I would be betting on 2024 also being positive, and I would bet on 2025 being some kind of a reversal year for the S&P 500. The second reason is if you look at the yield curve, 10-year minus the 2-year or the 10-year minus the 3 months, which has been a very accurate predictor of a recession. And every time we invert negative and we reinvert into positive territory, like what happened in 2007, we had the 2008 stock market crash, we had the COVID crash, which, yes, it was because of COVID, but we had a weak economy before that, and they were predicting a recession, and recession did happen. We had the market crash. Same thing happened in 2000. Every time we go back into positive territory, this is when the market crash was close to starting, and this is when the recession has begun. And as you can see here in this chart, we're far away from getting anywhere close to a positive territory on the yield curve, and I would not see it happening in 2024. It looks like it will most likely happen in 2025, which is why I believe 2025 is the most likely year for us to have some kind of a major top, and we see all these kind of people jumping into the stock market, trying to find the next Nvidia. But in my opinion, it's a very bad idea to be shorting the S&P 500, buying puts on the S&P. A much better idea that I have is if you have some kind of a cash position, and this is what I'm pretty much doing with my own cash position, which is not too large at all. I'm mainly trying to buy a lot of the defensive stocks because you have Nvidia, you have the AI stocks going up, you have the defensive stocks going down, like PFE, Pfizer, BMY, which is Bristol Myers, and you have something like Realty Income, which is sensitive to interest rate. All these stocks are paying pretty close to a 6% dividend. And once you have the rotation out of the Magnificent Seven, out of the AI stocks, you're going to have the money going into safety stocks, people looking for yield, especially if we have a massive recession. A lot of the Magnificent Sevens are cyclical. They have an advertisement business. They have a chip business. These things are cyclical to the economy. So if we do have a recession, people will look for stability. Your Realty Income has stability, 10, 11-year leases. Pfizer and Bristol Myers, I mean, they're pre-necessity industries, and they're paying a 6%. So you get a 6% yield on your cash while you wait for these stocks that most of them have pretty amazing upside potential that will most likely happen whenever the S&P 500 reverses. So to me, this is some kind of a short position that you actually could make money on other than just buying puts and keep rolling them over like a lot of people are doing. But I don't think anything is going to happen this year. I think it will most likely be in late 2024 or maybe early 2025. And it was not financial advice, of course. It was just my opinion on the S&P 500 and the economy in general. So thank you for watching the video. I really hope you enjoyed it. So if you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.